Welcome, everybody, to this week's podcast episode for the Financial Freedom Podcast. I'm your host, Dr. Christopher Liu. And as you know, I talk about four different types of freedom: time, financial, location, health freedom. And in that light, I'm always interviewing entrepreneurs, people on the cutting edge, doing interesting things, and sharing those insights and conversations with you. So today we have Brian K. Grimes Jr. He's a CFP, and he's the founder at 24/7 Cash Flow University. So today is all about investing, real estate. We're going to talk about how to approach the market in 2023 and beyond, and all different types of investment strategies as a real estate investor. So I'll let Brian introduce himself and talk about his background. So Brian, welcome.
Thanks for having me. Really appreciate it. Brian Grimes. I'm a serial entrepreneur as well as you. Started off as a basketball kid, growing up in Philadelphia, Allen Iverson fan, and I grew to be about 6'4" by age 13. So I got really good at basketball, nationally recruited. My first high school game, they flew us out to Akron, Ohio to play some guy named LeBron James, on his home turf. So played, a nationally ranked schedule. Basketball took me around the world, landed me at Columbia University. And that's where I started to get introduced into kind of finance, that world, doing internships for oil traders on the New York Mercantile Exchange and watching people make millions of dollars trading on tablets. And ultimately got into financial planning out of college, wanted to have financial freedom, be able to be my own boss, make my own schedule, do all those things. And as I did that, I would take every dollar that I made from financial planning and put it into real estate. And I fell in love with real estate ultimately and dove into that and haven't looked back. And that's kind of retired me early from the 9 to 5 and kept me running. That's awesome.
Like I said, real estate is one of those asset classes for the high net worth, the high income, and really the people, because it takes a lot of time and capital to actually succeed. What was it that appealed to you about real estate? Because some people hate real estate. The saying is tenants, toilets, and trash. But so what was it about it that appealed to you?
I think for me, I had this sports background, so I was very competitive, by nature always, and I found real estate to be the closest thing to sports that I could really find. There's that action of negotiating against other buyers, negotiating with sellers, doing the physical construction piece. You're dealing with contractors. Things can go wrong every day. Managing tenants. It's like the ultimate reality TV to me. On top of that, it's made more millionaires than any other industry. So it meshed well with my financial mind. Me wanting to get into finance to do asset management and to build wealth. And my real niche market is in that affordable housing space, creating this workforce housing, helping to solve the affordable housing crisis that we have here in America. So focusing on that, rebuilding communities and neighborhoods, creating jobs for other people who are from those neighborhoods. It just became like a labor of love, and it matched with all of my passions for helping people, low income, affordable housing, creating jobs, and then being my own boss. So building that cash flow. I wanted to get paid over and over again for what I did, for the properties that I built, not for what I was actively doing every day. So just having that residual income coming in was like key. So it just had everything that, I wanted. So I dove in head first.
Awesome. So we'll talk about, you talked about, affordable housing, Section 8. Tell us, are there solutions to this affordable housing crisis? What is it? What are the challenges of investing in Class C neighborhoods? Tell us more.
Yeah, I think the real solutions to the affordable housing crisis, most people don't know about, right? When you think about it, you think about low income housing tax credits. So we'll think about things like that, or even Section 8. The problem with some of the government-based voucher systems and tax credit systems is, one, not every type of property will qualify, and not every tenant qualifies for these programs. There are actually millions of Americans that are living at home on their parents' couch or in the basement, right? And they don't qualify for Section 8 vouchers, low income housing tax credits. And they also can't afford $1,500 a month rent in some of these places. And rents are always on the rise in a lot of the biggest cities. So the real affordable housing solution is co-living, is creating properties where like-minded individuals can cohabitate that property under a single family residence in most cases, and have an affordable rent where they can co-share the cost of living on their own, where they can split, the cost of utilities, rent, and some of these different amenities, and live in these major cities. So you basically can take a property, a 3-bed, 1-bath property, and break it down into 3 master suites, 3 beds, 3 baths. Each bathroom can only be accessed through the bedroom. Everybody shares the kitchen, and create this type of co-living atmosphere where the rent can now be $700, $750 a month per co-living unit, with utilities included, internet included, and you're just creating that workforce housing. That's the real solution that doesn't require any government subsidy, any tax and credits, any voucher program. And I've started to build into this and just seen like the wildfire of the demand. It is really build it and they will come. I tenanted over 100 of these co-living units in the peak of the pandemic from March 2020 to June 2020, over 100. And if you can remember back then, people didn't even want to leave the house. They're like, this thing's airborne. I'm not going outside. People were jumping into these co-living units like hotcakes in C-class neighborhoods because it's just that demand is there.
And where do you find these co-living spaces? Is it in certain areas of the country, or is it dependent upon the city, local governments? Tell us more.
You can build, these are things that you have to build. There are so few developers out there that are even focused in this space. So there are really people like me out there that are building these assets. We're buying shells, properties that are in almost tear down condition, and full gut renovating them into these co-living assets. But you can do it anywhere in the country. You just have to check the zoning codes, and they will tell you how many people can live in a property that are not related by blood under a single family ordinance. And once you have that number, you know how many co-living units you could build within a single family property. That number could be, in a place like Philadelphia, 3 people not related by blood. In a place like Atlanta or parts of Florida, it's like 6 people. So you could get a big country home, break this down into 6 units. And the one thing I didn't touch on is the cash flow. It's just 3X's on these properties. So a property that would rent for $2,000 regular to a single family, this might rent for $4,800 a month or $5,000 a month as a co-living property. So not only are you creating this asset that is addressing the affordable housing crisis, you're getting paid hand over fist to manage these types of assets. So it's a win-win.
And some of the people listening to this is it's like really interesting, especially when you talk about new strategies and new market niches. What are some of the challenges of investing in Class C neighborhoods?
Yeah, I think the challenge is really you have to get very granular with your comps, understanding how to run comps, how to think like an appraiser. That is really granular work that comes with experience. So it may take you some time to really understand block by block comparables and how to really think like an appraiser at that level. Also, finding the good areas to invest in. I tell people all the time, there are bad neighborhoods or bad areas of every good neighborhood and good areas of every bad neighborhood. So your job when investing in a C class is to find the good pockets of the C class, because the C class offers you pretty much this blank canvas. So I look at contractors and real estate developers in many ways as artists, and you're looking for that blank canvas neighborhood where there's all these shells and all this inventory that you can come in and create comps, flip some properties, create buy and hold deals. And the C class offers that more than the A or B class. From a pricing standpoint and a creativity standpoint, it's just not there. The profits are squeezed out. The cap rates are just way more compressed in those areas. So it's just not as profitable to invest there. But there are those challenges. There's blight, there's crime. You will need to have good security systems in place. You'll need to have remote cameras in place. But these are all, what I found is they're all very solvable issues if you just address them one by one, kind of do that first principles thinking, break it down to the first principle, address these issues one by one with the different technology and systems that are out there today that didn't exist 30, 40 years ago. And you can get right to the cash flow. I mean, once you solve these problems, everyone else who's afraid to invest in the C class, they just sit on the sidelines while you make all the money.
Yeah, interesting. And I know the elephant in the room is with interest rate volatility, is now a good time? And the other question is how to approach real estate investing next year and beyond.
Yeah, I think now is a good time to definitely be scanning the market and be in the market, because most of these major markets that have been sellers markets for the last 2 years, they're shifting back to buyers markets. We are looking at, a time where rates have increased, right? Everybody knows that. But as we're speaking today, rates have dropped, I believe, a full percentage point over the last 30 days. So they've been ticking down. And the projection is, as we get deeper into 2023, 2024, rates will start to adjust. The way out of a recession is to reduce interest rates. If you look at any recession in U.S. history, any one of them, the Fed has reduced rates on our way out of that recession. That's the way to get out. You have to do some type of QE. So we are expecting that we're shifting into buyers markets. There's more inventory hitting. Properties are sitting on the market longer. Sellers are making more concessions. If you're in the market and you're being an active participant, as rates start to tick down, you're going to get some unbelievable deals. And pricing is proving to be a bit more stable. I mean, I'd say a few months ago, people were projecting 80% pricing crashes or 60% crashes. We're not really seeing that. The crashes are a lot more gradual. It's kind of more of a step stair type of a process. And, we're seeing pretty good market stability, especially in the Northeast sections. One thing to keep in mind is real estate is micro local. The news is national, but the real market activity is super local. So what's going on the West Coast or in LA or in Boise, Idaho or Arizona is not what's happening in Boston, Philly, Cleveland, Connecticut. So these markets are different. Depending on where you're at, you're going to see different types of opportunities. So there are really good markets right now that we should all be tapped into.
Yeah, it's quite interesting. And then, a lot of individuals, especially because you look at the supply is increasing. We'll see what the Fed does, at the next meeting. Really fantastic question or interview. And then you are very knowledgeable. So tell us more about how people can find you, follow you on social media, contact you, and look into you more.
Yeah, I mean, the easiest way to find me is on YouTube. Brian Loves Cash Flow, and it's easy to remember because I love cash flow. So Brian Loves Cash Flow on YouTube. You can find a lot of my content, everything back channels to some of my free trainings that I put together for you guys. You can find me on LinkedIn, Brian Grimes Real Estate. I'm on TikTok, Grimes Estate on TikTok. You can find me there. Instagram, Brian Grimes _ 247 CFU for the 24/7 Cash Flow University. So that's the easiest ways to find me and get a hold of me. Like I said, we have free trainings. We do mastermind calls every week, live on Zoom, 8:30 p.m. Eastern Standard Time, where we can talk live, do Q&A, and talk about how you can get into real estate no matter where you're at. We have people, tapped in through our channel, through, all the way from the West Coast down south, even up into Canada and out of the country that are tapping into U.S. real estate through, some of our strategies and systems. So definitely come aboard. We're happy to help.
Yeah, and for all the listeners out there, check out Brian's resources. They'll be in the links and show notes. But so fascinating discussion about real estate investing, Class C, what the market holds for next year and beyond. Be sure to check out Brian on YouTube, LinkedIn, and all his social media channels, and follow him on his website. And thanks so much. And it's been a fascinating discussion.
Thank you.